Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. To start off, the date for our January free introductory webinar is firmly set for January the 6th, and the invitations to all those who have registered and been accepted were sent out this afternoon. I reminded you last week, the applications for attendance had been very strong, so we had to shut off all further applications. But if you would like to learn more, you can always go to strategicanalysis.ca and join our investing community by signing up as a client. As a reminder, I will be providing our attendees with a solid background to SVA so that you would be comfortable using it yourself to keep close tabs on your own portfolio. And now to business. After a mushy couple of weeks, the market appears to have found its footing such that the NASDAQ 100 has risen back almost to its potential breakout point, its HB1 level, or 10 times adjusted book value, although it is yet to advance any further. What strikes me as being of interest is that if you adjust our measures of the Standard & Poor's 500 and the NASDAQ 100 for beta, that is to say, their relative volatility, if the NASDAQ 100 can break out here, the upside for the NASDAQ 100 and the Standard & Poor's 500 are almost exactly the same, meaning our upside target for the Standard & Poor's 500 remains unchanged. Now, before we take a close look at the FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, well, let us start off with a look at Amazon. And it's in kind of an interesting pattern here. Amazon has been kind of riding along its HB2 price. And of course, the HB2 price was the 10-year valuation low. And this even in the face of an earnings disappointment and an earnings forecast write-down. You know, I think that there are three reasons that Amazon has held up in the face of apparently poor news, while other stocks, okay, have been crushed at the mere hint of a worsening outlook. Number one, Amazon is already trading at its 10-year valuation low. Number two, its business is so powerful and has such momentum that investors aren't probably too concerned about a little hiccup, a little blip. And third, and perhaps most profound, if you do not believe in Amazon, you do not believe. Turning to Apple, the second stock in our Phantom FANG portfolio, as I like to call it. You can see this dotted line, I hope, and the projection of it, I think, actually is what the HB6 structural price is if we adjust for the fact that the company has been buying back more stock, but we don't have monthly balance sheets, so we cannot adjust our projections, as it were, for that particular for the change due to the share buybacks. However, if I do the same thing now, in other words, I lay my boundaries along the HB7, which is 42 times book value, you can see that the HB7 and and the current stock price would appear to meet at about $195 to $200, something in that range. So we are still very much on side as far as Apple is concerned. And if it continues to buy back stock, that may not end that upside move. The third stock in our Phantom FANG portfolio is Netflix. And despite this little setback recently, okay, the stock has managed to hold on to its HB3 price, which is 16 times its book value. Now, I have to make a little observation here. You remember some time ago, old hands at FANG Friday will remember some time ago that I took a look at Disney, and I kind of used that as a canary in the coal mine for determining where Netflix might go. And I'm going to do that again right now, because here, see here was Netflix hanging on to its HB3, but underneath, and then finally breaking out and giving us a buy, which has remained in force to this day. But remember this? Let's go and take a look at Disney. Well, here was Disney, same time, same station, again hanging on underneath, only this time its super growth price, which is only 3.5 times book value. But look what's happened to Disney lately. Okay, and by the way, another stock that is in the streaming business, which is AT&T, looks also pretty poor as well. So I'm not necessarily saying that this is going to now lead to a failure of Netflix here, but I'm saying, look, the omens are not necessarily in our favor. Now, the first stock which has run right up against resistance along with the NASDAQ 100 and has been unable to advance any further, well, it's had a little few blips there, has been Alphabet. And to tell you the truth, you know that I have really liked Alphabet for a long time. Only reluctantly recently did I say, well, maybe I'll kind of pull to the sidelines on it. But the fair market value continues to rise at a nice pace. The stock is probably one of the two cheapest of the FANG stocks. And if the NASDAQ can break out here over its HB1 price, 10 times book, and the Standard & Poor's 500 meets its target on the upside, I would not be surprised to see Alphabet breaking out and perhaps moving as high as its HB1. No promises, because it hasn't happened yet, but really keep an eye on this one. Microsoft has also run right up against resistance at its HB3, and here, you know, yeah, the stock could break out, but I'm less confident that it's going to happen, and that's because you remember, as I showed you, I think last week, what happened when the stock was trading at its HB1 when we started off 2.5 years ago. It took forever for the stock to break out. No, when it broke out, of course, it moved very quickly, but it took forever. It took about 6 months, I think, to break out, and when it got up to its HB2, which is 12 times book value, again, it took forever to break out. So we're just getting to the HB3 now. And I don't know whether that pattern is going to repeat, but it may be very difficult for Microsoft to break out as good, bad, or indifferent as its fundamentals may appear. Nvidia, well, I've showed you this interesting stock right up against its HB6, and the reason that I really emphasize that is if I go back to the year 2000, that's the peak of the dot-com bubble, look where Nvidia topped out, right at its HB6. So I am not going to tell you that the stock can't go higher, and if the NASDAQ can break out and take the Standard & Poor's up higher, it may well do that. I'm simply telling you that this stock has reached a major milestone, and the market does have a memory. Finally, Facebook. Well, Facebook, we got a sell on the stock when it got to its bubble price. The stock is in a downtrend. It's in the glare of harsh publicity, and frankly, it's not a stock that I am comfortable with. And indeed, as I've told you, at least one of my clients has ordered me to sell it. So in summary, there are only 3 stocks in what I've called my Phantom FANG portfolio: Amazon, Apple, and Netflix. These all remain on side as far as our structural pricing is concerned. And matching the action of the NASDAQ 100, 3 of the FANGs, Alphabet, Microsoft, and Nvidia, had reached strong SVA technical resistance level, and all 3 have stalled out thus far. Of the 3, I like the chances of Google or Alphabet breaking out and have a decent move if the stock market finishes its job this cycle around. Nvidia could still reach a new valuation high, but you'd better wait for the buy signal. I have my sincere doubts that Microsoft can go any further than its HB3 price, which is 16 times book value, because it always seems to struggle for such a long time at each major breakpoint. Only one, Meta, or Facebook, is something that I would definitely label as being in a confirmed downtrend. I would not choose to own any stock that's in the headlights of the regulators, particularly one with such egregious behavior on its record, and that includes the very, very recent interview just the other day. Well, at present, as far as our Phantom FANG portfolio is concerned, I am personally only really comfortable holding Amazon, Netflix, and Apple. It would not take much to turn 3 of the FANGs, Alphabet, Nvidia, and maybe Microsoft, back into buys again. There are no stock market guarantees that our low super growth target for the Standard & Poor's 500 will or even can transpire. It's got a way to go yet. But it is the way that appears to be shaping up. I did not review Tesla this week, which I did last week, but it is still one example of a stock which is straddling the fence, in a way. It does add a further layer of uncertainty to the NASDAQ index, but I would expect that a break, whichever way it comes, up and out or down and dirty, will further enhance the market message that the FANGs will give us. Personally, I continue to watch to see if Amazon can hold at the HB2 price level, as that would break below its 10-year valuation low and perhaps signal worse to come from the stock itself and probably the overall market. As a last thought, just from looking at these 7 stocks suggests that there are more exciting times to come in the intermediate future. But what you should do with the rest of your portfolio will be more obvious with SVA at your side. Anyway, you know where to find me. And if you'd like to know more about how we can help your decision making, you should tune in to our free webinar in January, or go to info@strategicanalysis.ca today. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.